Good morning, welcome to Morning Outlook. This is Kim speaking on Thursday the 28th of July. So let's have a look at these markets this morning. In fact, let's just look at the risk events that are due to hit us and we'll talk about what happened. We'll talk about what happened very quickly, but today, key numbers there: advanced GDP, the first reading of the GDP figures. These are really high level numbers which I would imagine the Feds have seen at least the pencil version, if not the final figure on here. But that's due to be released at 1:30. Aside of that, then normal weekly unemployment claims. Don't think they don't normally hit too much at the moment. They've come out of that cycle. I'm just looking at what's else there. Okay, nothing else there for a Treasury Yellen speaking. At some point, well, that could obviously create some volatility. There may be other speakers actually. Let's just have a look here and see if there's any advanced speakers. There's no listed speakers. There's plenty of low-key stuff coming out today, but no listed speakers. Okay. Let's have a look then at the markets themselves. Obviously, the Fed meeting. The key thing I picked up from it was the change of comments in terms of they'll be now addressing, instead of giving forward guidance, they'll be addressing the increases meeting by meeting, which basically suggests it could be slowing down here. They may not be. Instead of increasing by 0.5% or whatever it might be next time, it might be a quarter. So it just gives that sort of the market the sort of, well, hold on a minute, we may have reached it here. Anyway, let's have a look then at the euro. So the euro pops back up and ended up on a reasonably positive day there yesterday. It has run back into these prior highs. Let's just draw on here across somewhere around here. There we go. So it has run back into that level and fouled at this moment. Whether it will continue to foul, we'll see. But the euro is rolling over at this stage. No doubt there'll be some divergence across the highs here. Yep, some divergence across the highs. So it's well, possible to pull back a little bit more. It'll be interesting to see how the data is digested by the markets as we go through the day. The other thing to consider with this is, okay, we've looked at the US state of affairs there, but the ECB is in no better place, and the Europe's certainly not in a better place. And it could just dawn on people that we've done that, and then we just see the euro coming off again. So just watching that this morning, see where we end up before or post 8 o'clock. But I do wonder if we'll see a bigger correction. Okay, let's look at the pound. So are we going to say, okay, Miko, I see your comments there hit 122. Certainly a possibility, I guess. It has been running a little bit stronger overall than, I mean, we've been putting higher lows, higher highs in. That certainly happened yesterday. Whether this can actually, it's consolidating around its highs. It's into its weekly R2 area, which may just stifle it a bit more. And again, the UK economics are not that great in the bigger picture, and whether this was sell off for the day. We've got the daily pivot below, which could be a draw. It finally worked out as a bit of a draw yesterday after popping up and making a new high, but making the high running back into the prior highs there. This bit of price action could all be given back. We'll see. To me, what was said isn't a massive game changer as such. It's where you would expect the dollar to weaken and the pound, etc., to push on. All these economies are in a in our own dire straits basically, and we could see it roll over. So as I said, we'll look at this morning. It could be coming down towards its daily pivot. It might even break that and head further south back to the. We often see it in the markets where it just comes back to where it was running in the first place, the same sort of trend. In fact, I tell you what's quite useful for this is just popping on the. There we go. The mean reversion. There we go, and just see if it comes back into this sort of range here. I mean, there's the mean of the price action that was running up there in black. With a couple of standard deviations either side of that. It's obviously out of that at the moment. It might just draw back in. We'll see. But I'm not overly bullish on any of these markets because we've seen a bit of a weakness come through. The yen. I was looking at the yen and the sentiment changed on the yen from the big money, but it still seems to be selling off here, and it could be the one, in my opinion, that makes the best of these moves. It does. The reason being, it's just a safety currency. It's one of the safety currencies, and we often see it gain. When everything else is a bit iffy, it often takes a gain. So on that basis, it might just continue some more, or consolidate a little bit more around its lows, or come up slowly like it did last time and push up in a similar way. Yen, Aussie dollar. Aussie dollar's taking full advantage. The inflation data, etc., was less than expected on the Aussie, but it's holding up okay. As an economy, it's probably in a better place than a lot of these others, and it might be one of these that does okay across the board. So high lows, high highs running for the 4-hourly. It's basically it's going to be putting a divergence in here. Yep, there you go. Always you tell it be a divergence that's really looking, but I like to look just to be on the safe side. Sometimes it might not be, but just softening up a little bit where it is here into this double top. Again, we've got untouched pivots. If they all start rolling over, we see dollar strength. This could well be a target. Canadian dollar. Canadian dollar triple, quadruple top, but the quad broke the highs there on this daily basis in the first place. But sorry, I'm just going from big picture, then dropping down here, lower highs, lower lows. It's been running pretty well. 4-hourly picture is telling us well. This is another market a bit like the Aussie in terms of it's been outperforming a little bit and doing okay. It too will have a divergence around these lows. Again, it's a pretty similar picture on all these charts. Just obviously this is inverted because it's the US dollar CAD instead of the CAD US dollar, but same sort of theory coming on here. Maybe we'll just see it running back towards a daily pivot. Let's just see how it shapes up post 8 o'clock. So get the London, the European market volumes in. It gives me a better idea. Morning, Ritu. Okay, that's where we are there. Let's move on. And CAD. Let's move on. Look at gold. If I can, if it'll click, it'll be good. So gold, running in. Gold's had a bit of a bounce here, obviously, and it's put a higher low in the short term here. Maybe it'll become more of a gain a little bit more with the doubts around the US economy, and it might be making its early move where it's sitting here. higher low confirmed. Here's the said. Personally, I'll still clear with it at the moment, but it is making a stronger a move for it, but it is still running into its daily 21 there, which could hold it, but if it breaks that, well, probably more upside. Oil, well, oil came good yesterday. This dollar, as soon as the dollar starts selling, the oil prices generally see the oil price shoving up here, and we're seeing that at the moment. There's nothing. Okay, it's putting its higher lows in. Did it just actually? It hasn't made a new high compared, and it will have a bit of divergence here. So you get the divergence traders coming into it very shortly. As it starts diverging there, it gets sellers back into the triple top effectively of what it is. If it can break through that way, well, yeah, it's got plenty of scope, but it's sitting around the sort of range I expect it to be sitting around. Maybe it'll head back up towards 105, but it hasn't yet broken that high there. If it breaks the high, it's given us on the bigger picture here, it's given us a higher low, and it looks more interesting. Okay. Is there a way to know what's expected of the GDP? No. Not from us, not unless you've got lots of running computer programs or etc. Aside, well, we know what the forecasts are. We can see the forecasts for the GDP. That they're out there, and expected to come in at 0.4. Last time it's minus 1.6. So you can see expectations, but that's as far as we can go with that. As in what it'll really come out as, goodness knows. So I haven't got a crystal ball. I've got no idea what it'll be like. There's possible dynamics where you can calculate different things from the parts of it. But I've never tried it, and I'm sure the big boys will be trying it and have their machines into it. Okay, let's look through then at whilst we're here then, go and have a look at the crypto side of things. Okay, so no shock there yesterday. Bitcoin pushing back up there on a slightly weaker dollar. It certainly seems that it's moving pretty much with the dollar index effectively, Bitcoin here. So unless we see a continuation here of these markets, Ethereum for example, looking to put in yet another higher low. It looks like it's actually done. It's confirmed the higher low there. So looking like it's got scope to get a wiggle on, but be interesting to see what the markets do this morning, whether the dollar is sold further or we see a retrace back. These could follow suit, most likely will follow suit. So same sort of picture across here again. Well, BNB's not quite broken out and given us a higher low, but it's again looking like it could push on a bit further. Okay, looking at the indices. So, well, no real change here on the CSI 300. Still struggling, still dancing around the lows there. Not massively convinced with any of them. The Nikkei has that's shot up this morning. It gapped open, pushed up, and only to find resistance into its R2 area. I think it is on the R1, R2. Can't see where it is, but certainly on one of its pivots there. Should be R1 sitting there anyway. I've got an overlap of pivots here. If I take the quarterly off, there we go. It is the R1 monthly R1. Okay, Nifty 50 again gapping up here. This sort of potential slowdown in interest rate increases obviously is a benefit to the equity markets, and we could just see some more pushing that way. There'll be some divergences across these highs in the shorter time frame on the likes of the S&Ps here, but it's taken the news and run with it at the moment, and we're certainly seeing a lot more bullishness. For now, it's coming. Some of them are coming off a little bit this morning. There'll be divergences sitting around these highs, I'm sure. And again, who gets the divergence traders coming in, trying to push it down further. This CAC this morning, well, it's a bit more bullish yesterday. Closing there, the futures higher, and certainly making a new high this morning. So equity markets are liking this. One that's a bit of a disappointment is the DAX. It's still not really on fire. It had a reasonable day in the end on yesterday's movement there, but off this morning, just not really going with things. And the FTSE, well, the FTSE's up this morning. There we go. FTSE's straight up. Managed to re-climb back up to the highs. It is still one of the darlings of the equity markets, and it looks like it's got the potential. Okay, that's pretty much it there. Whether the GDP will decide what next, it's one figure. As I say, they'll have been privy of that data, I'm sure. Maybe that's what is causing them to react as they are, in terms of if they can see things slowing up more than expected, they'll certainly put the brakes on, and it could be just that. Okay, I'm going to leave it there. I wish you a great day's trading, and I'll catch you in the morning. Bye for now. See you all.